Well, welcome back, everyone, to session 3. 30 minutes for lunch wasn't quite enough for me. I actually have both my desserts and my main sitting on the same plate, and I've yet to touch any of them. So thank you. As the conference goes on over the next 2 days, you're more than welcome to bring your food in, to go out. So treat this as you would your own family. So we're a great little family of investors. And if you need to go in and out at any time or eat in here, please do. Right, the poll is up. What will the gold price be in US terms at the end of 2023? So 57% of you are thinking sub 22 and 21% above 22. Interesting, isn't it? So we'll keep that going. So thank you very much for your contribution. We'll see what the next question put forward and puts to us. We have got 110 minutes of power investment opportunities for you now. So we are ramping up our speed a little bit. The content will just still be as fantastic, but our presenters now will be doing 10-minute slots instead of 15. So I will have to be brutal. I'll be ringing my bell again at 2 minutes. I'll be standing at 1 and I'll be very close to you at 0. Ready, team? So my first, or our first presentation in this session is brought to us by ABX Group. They are, of course, focused on delivering materials and minerals for a cleaner future. Their major focus is on the discovery and development of an ionic absorption clay rare earth project, which is located in the not-so-sunny climate of Tasmania. And the person that's going to tell us all about it is Managing Director and CEO. Would you please welcome Dr. Mark Cooksey?
Hey, thanks very much. Today I'm here to talk about our ionic clay rare earth project in northern Tasmania. And if there's one thing I want you to take away from today, it's that pH is king. So I'm Mark Cooksey. I'm the Managing Director of ABX Group. I've been with the company 3 years after most of my career with Rio Tinto and CSIRO. Take a look at the disclaimer slide. So we're about delivering materials for a cleaner future. And we have 3 areas that we're focusing on the moment: rare earths, which is the only one I'm going to talk about today, and also a project to develop a new process for taking waste and producing aluminium fluoride and other chemicals, and bauxite exploration and mining, which is where we started. Firstly, just quickly, our board. So we've got a very experienced and diverse board in terms of experience. So that includes Paul Lennon, former Premier of Tasmania, Ian Levy, former Chief Geologist of Western Mining and the founding Director of ABX, Director and CEO, and Ken Bounty, who's been a Director of numerous boards in a variety of industries. So a great breadth of experience to bring to these opportunities. So I'm going to be quick with the rare earths market. We all know it's growing. The important thing to understand is that the value is dominated by the market for permanent magnets. So there's 4 rare earths used for permanent magnets. And despite that being about 1/3 of the volume of the market, it's about 90% of the value of the market. So all these rare earth projects, we're really looking at permanent magnets to justify the project and be the opportunity for the project. It's also a market that's growing very rapidly. With the transition to the renewable economy, these permanent magnets are critical for electric motors and wind turbines. So there's 2 broad types of rare earth deposits. First type, which we're more familiar with, is the hard rock or the mineral deposits. An example on the left there from Lynas, been going many years, very good deposit. And you can see the breakdown there of the different rare earths within the deposit. So 3/4 of it, lanthanum and cerium. About 1/4 of it is the praseodymium and neodymium, which are 2 of these 4 permanent magnet rare earths. but there's very little of the heavy rare earths, which are the most valuable. On the right, this shows the breakdown of our clay deposit in Tasmania, and you can see it's quite different. So the lanthanum and cerium are much lower, and the real key bit here is the teal, the terbium and dysprosium, which are now a few percent. Now those particular rare earths are worth a lot per kilo, so those two alone probably are almost half the value of that deposit. And these types of deposits are only processed currently in southern China. Many of us, or many people around the world, including here, are looking for similar deposits here because they're higher in these heavy rare earths, and also ostensibly and can be lower cost to get into production. So that means also lower capex and therefore shorter time to get in production. So they're very appealing at face value. So we're the first company to discover rare earths in Tasmania. You can see the map there, covering an area of northern Tasmania, 50-kilometre area, mostly just west of Launceston. And importantly, we've reported the highest extractions from this deposit from any sort of similar clay-hosted deposit in Australia. So it's really looking, attractive again at face value. And we just announced an upgrade to our resource yesterday, in fact. So we're now at 21 million tonnes. So that's more than 5-fold increase from our first maiden estimate late last year. And sort of as a bit of a bonus from this announcement to the previous one, actually the grade's gone up and the thickness has gone up as well. And really importantly, this estimate is based on only 18% of our current prospective area. So there's clear line of sight to growing that resource. Now, I just want to delve into the clays a little bit. I say here, not all clays are created equal. And the real thing, we know the thing grade is king, but here with the clays, it's looking more and more as though pH is king. So on the left, I show ABX, our deep leads deposit, and that nearly 200 ppm is the grade of the 4 permanent magnet rare earths in our resource. The idea is, can you use a salt solution to get the rare earths out? So when we've had testing done at Ainscough, the base level testing, we get about 40% of the rare earths out. We're using that salt solution. So that's the dark green on the bottom left. The second and third columns are just hypothetical deposits. They're not real, but they're set here to say, let's imagine they had the same grade as the ABX one. But we see results from testing on other clays. You see quite different behavior where in some, like the middle one, you get progressively more of the rare earths out as you go lower in pH. That means you're adding more acid. And that means we're taking the acid from like the level of apple juice down to lemon, down to vinegar, down to battery acid. And on the right, we have an example where no matter how much acid you add, you still don't get any of the rare earths out. The question mark on the left is just showing we actually haven't done the testing at lower pHs yet. We've been focusing on the pH 4. So as you add more acid, logically, you add more cost. The question is, how much cost? If it's just a little bit, okay, well, we can deal with that. If it's a lot, it's a different story. So this is, again, designed to be illustrative. It is based on, some published information. It's not perfectly exact numbers, but it's designed to be illustrative. So on the left, right, you want to be at pH 4. You might have a certain operating cost. As you add pH, you add acid. Sorry, as you reduce pH by adding acid, you're moving to the right, and you're incurring more costs because you're adding more acid. So the blue line's going up. Also, in theory, you're generally getting better extraction as you add more acid. So that should make the blue line go down because you're lowering your cost. Both of those two things are in this chart. And what it shows is actually the additional cost you're incurring from adding acid is significantly outweighing the better extraction you're getting. So again, these aren't perfectly, I'm not saying these are real numbers, not exact numbers, but they are based on real published data. So they're quite, they're meant to be highly illustrative. Then you have the red line, which is the revenue. That doesn't change for how much acid you're adding. You're still getting the same revenue from a kilo. So it's really clear here. You want to be at the left-hand side of the curve, right? You want to have the lowest cost to give you the best chance of profit and the highest profit margin. And so the question got to ask ourselves is, when you look at extraction data, what pH was required to get that? Because the pH that was required, how much acid, makes a big difference to the operating cost. And as far as we understand, all the Chinese ionic clay projects operate at pH 4 at the left-hand side. And so if some knowledgeable people say maybe you have to operate at pH 4 to make these things economic, I'm not sure about that, but it's a theory. If that was the case, if you take those original deposits, ours on the left and the two hypothetical ones, and only considered how much of the grade is recoverable at pH 4, now that's the desorbable grade of the deposits. They're now very different compared to at the beginning. I said they're all the same. So that's the importance of pH. And so our strategy, we're trying to rapidly develop a project to produce a low mixed rare earth carbonate, more drilling, more metallurgy, and in particular now the focus over the next several months is likely to be better estimates of CapEx and OpEx to really understand where we are on the cost curve. So I'd like to thank you for listening today, and together we can increase the rare earth supply from Australia. Thank you.
Thank you, Dr. Cooksey. Next up, OD6 Metals has been recently announced, some significantly high-grade rare earth drilling, along with some excellent metallurgical recovery results at its Splinter Rock project, which is down near the beautiful Esperance in Western Australia. And with those rare earths forecast to be in hot demand over the next decade, it bodes well for this company. Would you please welcome their MD and CEO, Brett Hazelden?
Thanks, Chrissy. Thanks for that. 10 minutes, short time frame, so let's get straight into it. We believe we've got a globally significant rare earth find here. It is clay hosted. A lot of the ones that you'll see today and then over the next couple of days will be clay hosted. I won't go into the ionic versus non-ionic and all those type of things, but let's talk about what we've got. We've got Grass Patch and Splinter Rock. Splinter Rock is our major flagship project. Multiple large-scale prospects identified that we'll talk about. High grades, so well above 1,000 ppm. That gives you more revenue than lower grades. 22% magnetic rare earths, as people have mentioned, that's where the money's going to come from. So we need those to be high. And importantly, we've got 10 to 80 metres in thicknesses near surface. So massive scale here. We're receiving averages of 60 to 75% recoveries and up to 90% as well. And these clay basins are covering over 250 square kilometres. Importantly, we're close to Esperance. So for those of you that don't know where Esperance is, it's in southern WA. It's got iron ore going out of it. It's got wheat, barley, and a whole heap of other commodities going out of it. So it's a big port. We're located on sealed roads. We're about 20, 30 k's away from a sealed road. And there's also lots of wind power down there as well. We listed it on the IPO back in June last year. We've done lots of things since, lots of drill programs, lots of metallurgy programs, and a number of things. So we've had a good run, and we're still running at the moment. So let's talk about the airborne electromagnetic survey. So this is one of our most eye-opening factors that we've been able to use. It's a big exploration targeting tool. Our last drill program had 90% successful holes based on using this. So this Technicolor little map on the right-hand side there really is just telling us the green and blue areas are the granites. The granites were the original host material that's been eroded off to clays over millions, hundreds of millions of years. And they've been eroded into the old valleys that you'll see in the yellows and oranges and reds there. So that's what we're looking for. That's what we've targeted, and those areas are big, which we'll come across in a second. I'm not going to touch on the geology here due to time, but again, granite's going into these basins effectively. But if we look at that cross-section that's there from A to B, that's 40 kilometres in length. So that's a big area, big long area. So let's go into the details a little bit more. 4 main prospects there. Each of them well above 1,000 parts per million at either 300 parts per million or 750 parts per million grade. And that's important. That's what gives you revenue. If you're down around 600, 700, 800, you're going to struggle for your revenue and you can't afford acid. You can't afford other reagents. Magnetic rare earths, that's where the money is. It's not too many people that get above those 21%, but a lot of these clay rare earths, they are getting high recoveries. So then you're getting a higher revenue mark as well. The clay thickness is important. Why is it important for? If you've got 2 to 10 metres thickness, you've got a big stripping ratio and you're impacting a large area. Whereas we've got up to areas of 10 to 80 metres in thickness. And these areas, the lengths and widths that we've identified from these clay basins are multiple kilometres in width and tens of kilometres in length, massive areas. Thickness to the cover is in between 3 to 35 metres, and metallurgy results I'll touch on shortly. So we're in Sydney. I thought we'd put up a little slide here of how big is the Sydney Harbour for those that don't know in comparison to what we've got there. So the Sydney Harbour from the heads all the way to Parramatta is 55 square kilometres. Lots of water there. That's it shown in blue. The clay basins that we've got shown there and that we've been drilling out are multiple Sydney harbours, almost a Sydney harbour each. So what we're now targeting is the best of the best from these results. And tonnes aren't going to be a problem. There's going to be hundreds of millions, if not billions of tonnes out there. So watch out. We're just looking for the best grades, best metallurgy, and we'll touch on that shortly. So looking at centre. Centre, big thick intersections there, 50 to 70 metre thick, 1300 to 1700. And that's a 5 kilometre in width section. Again, just to give you an idea of what we're talking about. Metallurgy, let's talk metallurgy. There's a lot of talk about metallurgy. We're using a hydrochloric acid as the basis for our works. So there's a couple of reasons for that. You do get higher recoveries. We get the ionic portion of it, but we also get the readily acid soluble. So we increase our revenue. We've got higher grades. We can afford it. We can use sulfuric acid, and we can also use ammonium sulfate as well. Now, hydrochloric acid, simply put, is easily produced on site. You take table salt, add water and power, and you get hydrochloric acid, and you also get a base, which you can then use to neutralise the hydrochloric acid when you put it all back in to the pit at the end of the day. So we're going to have to wear those costs. We could use sulfuric acid. You produce sulfuric acid by burning sulfur, and then you still need to add a lime to neutralise at the end of the day. And you can use ammonium sulfate, which is fertiliser. How do you produce the ammonium sulfate? You take sulfuric acid, which I've just told you how to produce, and you also take ammonia, which is produced from a gas plant up north in the Burrup Peninsula. So there's different costs for all these reagents. It really doesn't matter which of those three processes you use, as long as you've got the grade, as long as you get the recoveries, and as long as your revenue is in the right area. And that's what we're chasing. The best areas out of these multiple Sydney harbours that have grades in excess of 1500 ppm, that are getting the recoveries, not just 30 or 40%, which are seen in just purely ionic clays, but getting the 60s, 70s, and even higher recoveries. What's next for us? We've got a next round of drilling that's going to start in June. So we've tested the width on these. Now we're going to test the length. So 20 odd kilometres in length, we're going to test through the centre prospect. That's going to start in June. We'll have that finished by July and results coming out after that. We also got awarded a $180,000 co-funded drilling program from the West Australian government, which is their flagship exploration incentive scheme. So that's covering part of the cost or half the cost of that program there. So good news flow that will continue to come out of that. So we're targeting a mineral resource. So this is going to be sizable to start with, and we're going to continue over the next 12 to 24 months to double, triple, and even go higher on those. But what's important in a resource? Grade, as always. Magnetic rare earth, that's where the money's coming from. Thickness, so low stripping ratios, low impact to the environment. And can you actually leach it? Can you actually get it out of the solution or out into solution and then treat it from there? And let's talk about capital costs just briefly. I won't say numbers or anything like that because we don't know yet. But all these clay hosted shows have to have a very similar process. We stick it into a tank, we then take the solution, we then remove the impurities, and then we then put it in the back of into the pit. So the actual physical capital cost to build the tanks is going to be similar across ammonium nitrate, sulfuric acid, or hydrochloric acid. It's going to come down to what your operating cost is. How much are you actually getting out? The more you recover, the higher the revenue, the higher the grade, the higher the revenue. So that's what it's looking for. Corporate structure. We're not a $300 million market cap yet. We're only $30 million. So looking to go up a lot higher based on what we've got and the size of what we've got. We've only got 100 million shares, just over. We're a simple structure. We've got a good mix of retail, a few institutions, directors and management are obviously well and truly in there. We've got geologists in there. I'm a metallurgist and chemist is my background. We've got another one in there. So we understand how this all works. And we've also got a good corporate finance guy and peers on the board as well. So well structured. So back to the highlights. We're near Esperance. We've obviously got rare earths in multiple areas. I didn't touch on the market today because we didn't have time, but demand for rare earths is going to forecast to triple by 2035. What does that mean? We need another 10 to 12 rare earth mines developed in that time. So the reality is, it doesn't matter if you're in Brazil, doesn't matter if you're in Uganda, doesn't matter if you're in Australia. We actually need multiple mines to get up and running, and the industry needs to work together to actually get those areas up and running outside of China and actually new sources coming. We've got a good discovery there, good grades, good metallurgy, good size, and we've got a good skilled board. So thanks for listening, guys. We're looking forward to this rare earth industry really getting off. And there's only one in Australia at the moment, which is Lynas, and we need another 10 to 12 mines.
And Brett, perfectly timed. AIC Mines are next up on stage. They are a growth-focused Australian copper and gold mining company. They own the Eloise Copper Mine, which is a high-grade operating underground mine located in sunny North Queensland. And addressing us today is their Managing Director, Aaron Coleman, who I believe is very well known to a number of you in the room. Please make him welcome.
Thanks, Chrissy. With only 10 minutes to present, let's get straight into this. AIC Mines is one of a very limited number of opportunities on the ASX to invest in a pure play Australian copper company. We're a copper company that is currently in production, is expanding production, has a well-articulated growth strategy, and is led by an experienced board and management team who have a track record of success. We have an experienced board. They've built mines and built companies before. They have the experience and expertise required to make AIC Mines a success. Joseph Alraghi, our chairman, was MD and executive chairman of London and Toronto listed Centamin Limited, where he built the massive Sukari gold mine in Egypt. Prior to joining AIC Mines, I was head of business development at Evolution Mining for the 10 years from inception. Many of the team at AIC Mines also previously worked at Evolution Mining. You'll see many similarities in our growth strategy and in our high standards. The board and executive team have large shareholdings in AIC Mines. We are very aligned with shareholders because we are shareholders. We are currently covered by 5 analysts, all with buy recommendations. Mike Evans at Acova Capital initiated this morning with a 65-cent price target on A1M. Mike is here at the conference. His research report is available at our booth. George Ross at Argonaut has a 76-cent price target. Dan Roden at Jefferies has a 65-cent target. Paul Kaner at Ord Minnett also 65 cents. And Peter Cormandy at Shaw and Partners has a 60-cent price target on AIC Mines. The average analyst target is an 80% uplift from our current share price. Surely worth a punt. Our flagship asset, Eloise, is a high-grade operating underground mine. It commenced production in 1996. We acquired it in November 2021. It's a sulfide ore body. We use conventional crush grind float processing to produce a concentrate, and that is trucked to Mount Isa for refining into pure copper. In the March quarter, just gone, Eloise produced 2,475 tonnes of copper, 1,136 ounces of gold in concentrate. The mine was cash flow positive. Production at Eloise is due to increase this quarter as we transition to more productive areas of the mine, and recent operational changes, namely new trucks and new production drilling contractor, take effect. Our main ore source currently is the Macy deposit. It is a much more productive deposit for us, essentially because it is closer to surface. The reserve and resource position at Eloise underpins a life of mine plan out to 2030. We expect to be mining at Eloise well beyond 2030. Due to the geometry of the mine, its depth and access to drilling platforms, the deposit is not drilled out. Most of the known areas of mineralization remain open along strike and at depth. Ongoing drilling is continuing to replace mining depletion year on year. When we acquired Eloise in November 2021, we said that we would add value through exploration success, resource growth, operational reliability, and regional consolidation. We have delivered exploration success and resource growth, and we expect to continue to do so. In our 18 months of ownership, we have increased copper reserves by 74% and increased copper resources by 109%. We've also made a significant new near mine discovery at Lens 6. We've commenced the necessary recapitalisation of the mine to deliver reliable production and operational reliability. The standout value add opportunity at Eloise, though, was to consolidate the stranded deposits in the region to both expand and extend production from the Eloise processing plant. We kicked off that consolidation late last year with a successful takeover of Meteoric Ltd, who owned the adjoining tenements covering 2,000 square kilometres, and importantly, the 9.8 million tonne Jericho copper resource. Jericho is a perfect fit with Eloise. It's located only 4 kilometres from the Eloise processing plant and has similar geology, mineralisation and metallurgy, meaning that we'll use the same mining methods and processing methods that we are currently using at Eloise. Jericho allows us to expand the Eloise processing plant and lift production to over 20,000 tonnes per annum copper and 10,000 ounces per annum gold. It will reduce our operating costs through economies of scale. It increases the mine life and it de-risks production by increasing our number of available ore sources. Development of Jericho transforms Eloise into a true cornerstone asset for AIC mines. Jericho currently hosts a resource of 9.8 million tonnes, grading 1.8% copper and 0.4 grams per tonne gold. It's open along strike and at depth. Also, importantly, it is shallow, commencing below only 50 metres of cover. The diagram on this slide shows you why we're so excited about Jericho. It shows the relative depth of the Jericho resource compared to Eloise. We're currently mining about 1/3 of our ore at Eloise from the deeps, which is 1.5 kilometres underground and hence a 12.1 kilometre truck uphill to the mill. Our shallowest current ore body at Eloise is the MEI deposit, our main ore source in 2023. Jericho is shallower than MEI. So the current Jericho resource is larger than the current Eloise resource, shallower than the shallowest Eloise deposit, and is a shorter average haul distance to the mill. Development of Jericho is transformational for Eloise. I don't think the market quite understands that yet. I don't think the value of Jericho is yet reflected in the AIC Mines share price. Our initial estimates are that Jericho development and Eloise expansion will cost roughly $85 million. That includes $25 million for studies, drilling and early works, which have now commenced and are fully funded by the $30 million capital raise we completed earlier this year. We currently expect the plant expansion to take a minimum of 12 months to complete, and that the Jericho box cut and decline will take 12 to 18 months to reach first ore. Please note, though, that the capital cost estimates in this schedule are early stage estimates. The mining, processing and engineering studies that we are completing this year will firm up the costs and schedule. The acquisition of Meteoric not only delivered Jericho, but also 2,000 square kilometres of prospective tenements. High quality geophysics and initial wide space drilling has been completed by former JV partners, Oz Minerals on the western side and Sandfire on the eastern side. That work is immediately useful to our search for satellite deposits. Even a relatively small deposit like Sandy Creek, 20 kilometres west of Eloise, is important from a hub and spoke perspective. We are about to commence a drilling program at Jericho, and once that is finished, we'll move the rig to some of these regional prospects. We have a cornerstone asset located in one of the most significant copper producing regions in the world, a region where many more opportunities for growth exist. We continue to look in this region for projects that will grow and improve our asset portfolio. We are targeting late stage Australian copper and gold projects. Our growth strategy is a strategy that was honed and refined over 10 years at Evolution Mining. We are now applying that same strategy with the same energy and discipline at AIC Mines. To wrap up, AIC Mines is led by a highly credentialed and heavily invested team. In the near term, we're adding value through the development of Jericho and expansion of Eloise, transforming Eloise into a reliable, long-life copper mine of meaningful size. Over the long term, we will add value as we continue to build AIC Mines through exploration, development and acquisition. Thank you for your attention. I look forward to taking any questions you might have either at our booth or via Twitter.
Thank you so much. They're good with time today, and striding down from the back of the room is a mild-mannered geologist with the odd 17 years of experience under his belt. This is Ned Summerhayes. Ned has got exploration experience both here in Australia, overseas. His keen focus, his love, his passion is gold exploration in Western Australia, which is lucky because at this point in time, he is CEO of E79.
As you wish.
I can say as I wish. Thank you so much because I'm in charge. He's the CEO of E79. And that focus, of course, is their exploration projects in WA. And that's what he's about to give us insight into. Would you please make him welcome?
Thank you very much. And thank you very much for RIU for the opportunity to speak. So E79 Gold Mines, as just said, we're a gold-focused explorer in Western Australia. We're focused on making a greenfields discovery. Please see our standard disclaimer. So the company has experienced management. The team that are behind E79 Gold Mines were behind Integra Mining through their discoveries and their development. They're through Staveley Minerals through their discovery, and E79 is their return back to the Eastern Goldfields. We have two key projects in Western Australia. Both are within large, prolific greenstone belts. We have a strategy of putting our money in the ground. We want to do as much drilling as we can to make the discovery for the shareholders. You can see the directors on the left, led by Chris Cairns, Peter Ironside and Deborah Lord. And you can see our corporate information on the right. We have about 66 million shares on the market, and we currently have about $5.5 million in cash. The two flagship projects within Western Australia, one is in the Laverton Tectonic Zone. That zone is a 250-kilometre long deep structure that's endowed with about 30 million ounces of gold. This is a world-class zone. Our second project is up in the Murchison region, just to the west of Meekatharra. The Murchison goldfields are also endowed with about 30 million ounces of gold. So focusing in on the Laverton South project, you can see on the map shaded in grey the Laverton Tectonic Zone. The table on the left highlights some of the large deposits: Granny Smith, Wallaby, Sunrise Dam. These are big world-class deposits. They're also clustered just south of the town of Laverton on the map. I think I've got a laser here. Around here. So relative to the well-explored north and central parts of the Laverton Tectonic Zone, the southern part, where E79 is located, is underexplored. While we do say it is underexplored, it has had recent exploration success, both in the forms of Breaker Resources with their Lake Roe gold project, now at about 1.5 million ounces, and also more recently with the Rebecca Gold project, now owned by Ramelius. Most of you will probably be aware that last week Ramelius completed taking over control of Breaker, and they're now 51% shareholder. So to get our two underdeveloped mines in the region now owned by the same owner is wonderful news for us. And in between their projects is where we have some of our tenements. We have two groups of tenements here, the Pingeon and the Lake Indana, both 100% owned by the company. The Pingeon area was a great one for us to start off on. It had a previous explorer, St Barbara, who'd done a lot of work and created a lot of drill targets that they hadn't followed up. This allowed us to list and drill within 30 days and start drilling in these regions. They had 4 walk-up drill targets, of which 2 have been tested by the company. And between targets 1 and 3, which you can see along this zone here, is Kerguela's Gift. So this is off our tenement, but at drilling in 2011 hit 33 metres at 3.1 grams per tonne from about 50 metres depth, so that we know that there's ability of the rocks in the region which go through our tenements to contain thick, high-grade gold mineralisation. So most of our drilling to date has been on a target called Target 3. We utilised air core drilling to really define about a 2.6 kilometre long zone of anomalous gold. Within that zone, there were 3 kind of higher grade sections that we focused on. All of those got RC drilling late last year and found gold to around about 200 meters depth. It's quite a robust target, apart from the length. It's got some geophysical attributes, which are similar to some bigger deposits in the area. Gold's along a granite greenstone contact. We found evidence for a large-scale fluid mixing, explaining why the gold's there and giving us an idea of the size of the system. And there were multiple gold pathfinders along. The drilling, we've had multiple 1 gram per tonne intersections over 2 kilometres strike. We're still discovering about this system. We haven't hit the high-grade zones yet, but we currently have 2 drill rigs on site, an air core rig expanding the known areas and an RC rig targeting some deeper areas. With the work that we've done so far, we're able to draw some analogies from what we're seeing, the observations that we're seeing in our drilling, with observations that you can see in larger deposits within the region. So we'll spend a little bit of time on this map. We can see on the left, we have the large Granny Smith gold mine in plan map and then in cross section. And on the right is our target 3 in plan map and in cross section. So both of these projects are in the Laverton tectonic zone. They're both within roughly 3 kilometre long gold trends, which are lower anomaly gold trends. The mineralisation is on the eastern side of a small granitic intrusion, and gold is not only within the granite, but also within the contact area. Importantly, when you look at the cross section, I'll come on too far. You can see this thick low-grade zone of gold, and then at Granny Smith and underneath along the contact is where the high-grade zones sit. The drilling that we've done to date highlights our thick low-grade zone, and we currently have an RC rig on site testing these high-grade portions. That drilling has been going for about a week, should finish in about 2 weeks, and we'll get results through after that. So we knew from the air core drilling that the granite is the target that we're looking for. So we undertook a gravity survey, which allowed us to try and map this granite at depth. We are undercover here. You can't just walk up and find it. We can find it with a drill rig, but the gravity enabled a much greater area to be tested. And we did find, we were successful in finding a northern extension to our target granite and a potential southern offset. The southern offset has already been tested with our air core rig on site, and we look forward to those results coming through. Still in the Laverton South area is our Lake Indana project. This is a great first mover opportunity. Large lot of ground within the Laverton tectonic zone that was kind of mis-surveyed as a granite, and we've been able to do some work geophysics-wise to unearth about 25 kilometres of greenstone that has been effectively untested. I think there's 65 drill holes within the project, and that's a 200 square kilometre tenement. So we know that we've got greenstone there. The minor amount of drilling that was there shows more greenstone. We're going through the advanced stages now of our heritage surveys, and we hope to be drilling within the end of the month. The beauty of this is that anytime you're in a new search sphere, the biggest deposits are usually found earlier. So this is a project we're very excited about. Our second project up in the Murchison, again, we've delineated where we want to be using our gravity. We've done, you didn't cut it off? That's all right, I don't need that. So again, we use the gravity to find out where we want to be. We've done a large-scale auger program testing 30 kilometres of prospective stratigraphy. Those results have just started coming back, and we'll announce those in the coming weeks. We have about 90 kilometres of the Big Bell Shear, which hosts the Big Bell mine, which is the largest mine in the region. There's a map of the areas that we've tested, and they're our exploration projects. So yeah, thank you very much for listening, and we're at booth 97 if you have any questions.
I was just checking you're okay, Ned, as you left the stage there. I didn't do that on purpose. You're perfectly on time. Well done. Right, Martin Stone, where are you, sir? Come and join. I was sitting down the front. Very good. Hello. Martin is the Chief Financial Officer for Alltech Batteries, and they're going to give us an insight into their revolutionary German-designed Sir Energy sodium chloride solid-state battery, which is being commercialized for the burgeoning renewable energy battery storage market. Now, this is interesting future-facing tech because as we're talking about renewables today, they have no lithium, they have no copper, they have no cobalt, they have no graphite. So the big question is, what does it have? And what could it mean for your investment portfolio? Why should it be in there? Let's find out. Martin, over to you.
All right, so talking about grid storage batteries, and that's what Alltech is focused on. So to understand what a grid storage battery is, we need to understand what a typical energy system looks like. So this shows you a typical green energy system where you've got solar parks, you've got wind parks, putting energy into the grid, and that is fed into houses and buildings and providing energy that way. So that's great, but what's happening is that a lot of the energy that's being produced by these green sources isn't being used by the grid at the time that it's being produced. There's too much energy being produced and it's not being fed into the grid. What's happening to it? Well, it's actually being fed into the ground, and there's a loss of energy there. In fact, Germany in the last year lost $2 billion worth of energy that it was producing from green energy systems and wasn't able to utilize. It was putting back into the earth and losing that. California last year wasted $3 billion worth of energy that it wasn't able to use and was wasted forever. Now, what happens to these green energy producers when the sun might not be shining, say, for example, at nighttime, or the wind isn't blowing because it's that time of the day? Where does the energy come from to support the grid so that the houses and the buildings can still continue to operate? Well, the solution to that problem is grid storage batteries. Now, everyone understands that the world is heading towards a green economy, green energy production. Part of the solution is producing the energy, but what a lot of people don't realize and where this is all heading is also the requirement to store the surplus of the energy in the batteries so that energy that's produced intermittently can be stored in these batteries and then returned to the grid so that it can stabilize the grid at times when the energy is not being produced. That's what Alltech is focused on. That's what we're producing, is the grid storage batteries. Now let's talk about lithium-ion batteries at the moment. Lithium-ion batteries have a liquid electrolyte and they've also got a plastic separator sheet. And they're the two elements of a lithium-ion battery that causes fires and explosions. So what the industry is looking at is introducing what's called solid-state technology. And solid-state technology is replacing the liquid electrolyte and the plastic separator sheet with a solid ceramic electrolyte. And that's not causing the fires, it's explosion and fireproof. So with lithium-ion batteries, we've seen the challenges with the fires and explosions. What's actually happening is something called thermal runaway, which is where there's a chemical reaction inside the battery and it gets to such a hot temperature and it catches on fire. And these batteries are almost impossible to put out. We've seen on the news these Teslas and whatnot, the fires are just lasting for days. And that's because oxygen is produced in these batteries at the cathode level and it's fueling the fire, and these batteries are nearly impossible to put out. Lithium-ion batteries also operate in a very low temperature range of about 15 degrees to 35 degrees. And that's because the lithium faces viscosity issues, and when it gets too hot or too cold, it loses its capacity. So lithium-ion batteries aren't suitable for very, very hot climates or very, very cold climates. Lithium-ion batteries also degrade. The lithium degrades over time, and they've got a limited lifespan of about 8 years. Lithium-ion prices are also going through the roofs, putting a lot of pressure on the battery production and battery costs. Cobalt, a lot of cobalt used in lithium-ion batteries, and 70% of that comes from the Democratic Republic of Congo. It has supply chain and ethical issues in sourcing that cobalt, so that's a concern as well. And graphite, a lot of graphite used in the lithium-ion batteries, 90% of it comes from China, which is a geopolitical and sovereign risk. 2.5 times the amount of copper is used in a EV compared to a standard internal combustion engine. A lot of experts are saying there's not enough copper coming into supply to support all the world's needs. That includes an estimated 27 million EVs that are expected to come on the market in the coming years. So, is there a battery technology that is fire and explosion proof, that operates in a large temperature range, has a life of more than 15 years, and doesn't use any of those expensive metals like lithium, cobalt, copper, graphite, or manganese? Well, there is, and that's what we're commercializing at Altec. It's called the Serenergy battery, the Serenergy sodium chloride battery. It uses sodium chloride, which is common table salt technology. It was developed by the Fraunhofer Institute, which is a German government-owned institute. They are the joint venture partners with Altec in this product, and they have spent the last 8 years developing the product ready to commercialize, and the main material is common table salt, sodium chloride. Now, the Serenergy batteries are fire and explosion proof. We don't have the liquid electrolyte and the plastic separator sheet. We have a solid state electrolyte technology, so these batteries are completely fire and explosion proof. We don't have the thermal runaway issue. They also operate in a very wide temperature range. They last for over 5,000 cycles or 15 years. The sodium doesn't degrade like lithium degrades. The sodium maintains its fundamental capabilities. And we use common table salt. It's in abundance, it's readily available, and it's cheap. No cobalt. That chemistry doesn't require it. No graphite or copper. We don't need that at the anode section of our battery. The anode is self-forming sodium molten anode from the salt, so we don't need those materials either. We're ready to commercialize. Our joint venture is 75 Altec, 25% Fraunhofer. This is the facility in Germany where Fraunhofer's developed the battery ready for it to be commercialized. It's a 35 million euro pilot plant facility. We're building, or we're commercializing, a 100 megawatt hour plant in Saxony in Germany on land that Altec's got, 14 hectares. That's a center of EVs and battery technology in Germany. Fraunhofer estimates that the product will be 40% cheaper to produce because we use a sodium technology. We don't use the expensive metals. We're doing a bankable feasibility study that will be available at the end of the year, and that will confirm the costings of this, but we expect them to be 40% cheaper than lithium-ion batteries. Now, just to leave you with, I've got a small video here that I'd like to play, which kind of summarizes and wraps up everything I've been discussing here. So here we go.
In a breakthrough for battery technology, Australian company Altec Batteries has launched a design for a 1 megawatt hour sodium chloride Serenergy battery pack destined for the renewable energy storage market. The product, called Grid Pack, uses an innovative new sodium chloride battery technology. One of the unique features of these batteries is that there are no moving parts, such as cooling fans, like in lithium-ion battery packs. They're totally silent and can be installed close to residential neighbourhoods. These innovative batteries can even function in extreme temperatures, from frigid cold to scorching desert heat. They also have a lifespan of over 15 years. That's nearly double a lithium-ion battery. The plug-and-play feature of the site installation for the grid packs ensures that they can be easily installed in remote locations. Additionally, the containers have been designed to be stackable, which minimizes the battery footprint.
That was the end of the video, so I'm finished. Thank you very much, everyone.
I was going to say I didn't kill her either, but I did notice there was a fashion faux pas. So I removed my red jacket, but she obviously has good choice. Right, we are at the official halfway mark of our speed investing session. This is presentation number 6. And look, if you had a chance to jump on your news feeds at lunchtime today, you would have seen an interesting little announcement about this company. There was an article about yourselves. Musgrave Metals is next up. They're actually a gold and rare earths company. They have a portfolio of actively expanding high quality projects across Western Australia, including gold up in the Murchison, and down south, southern WA, there's rare earths. This fellow here is Tim Davidson. He's both their CEO and their MD, and he's joining us on stage to discuss their recent successful results, which is what was featuring today in the news, and also some progress. Would you please make him welcome?
Thanks very much, Chrissy. It's great to be here, and it's great to share the Musgrave Metals story. And that story right now, Chrissy touched on some really good rare earth results that we put out, but really the focus of the business right now is advancing our Murchison Gold project through to development. We've got a really exciting project there. I'll touch on that today. And with respect to the rare earths, I'll briefly touch on that. But if you want to catch up at the booth, I can talk more about those. So with respect to the business, we're led by a really experienced board and management team, and a management team and a board that's demonstrated to be able to grow the value of businesses and create shareholder wealth in the resources space. We're led by Paul Chapman, our chairman, who was the founding shareholder and chairman of Silver Lake Resources, a gold business, multiple assets, producing mines. Paul Adams and Roger Steiner-Price, both involved in big discoveries in Western Australia that was subsequently taken out by Ramelius Resources. Our exploration manager, Duncan Franey, again involved in the Tampere discovery, taken out at a premium by Ramelius, and Chris and myself, both mining engineers. Our experience is in operations. So look, we've got an experienced team, a team with the right experience to take this Murchison Gold project through to development, and a team that's demonstrated their ability to create value in the resources space. The other really important thing is that we're heavily invested in the business. So we've invested $2.8 million, that's the board and the management, in the business to date. And on top of that, if you look at our incentives, the management's incentives, those incentives are priced, or the performance incentives are priced at a share price of around between 10 and 12 cents. So there's a huge incentive for us to grow the value of this business, and that's what we're actively trying to do. Now, if you look at the capital structure, we closed on Friday with a share price of 3.4 cents. It gives us a market cap of around $35 million. We finished the March quarter with just under 5, so an enterprise value of around $30 million. And if you look at what underpins the value of the business, it's 1.2 million ounces. We feel it's largely the 1.2 million ounces at a very high 3 grams per tonne global grade in the Murchison. And if you value us on that resource alone, EV per resource ounce basis, it works out to be about $25 an ounce. Now, we feel that is that's a very low valuation given the quality of that resource, given the grade of that resource, and we feel that, and given our experience and what we see in the industry, it would be very difficult to go and drill out a resource of that size and that grade for $25 an ounce. So there's a compelling valuation purely on the resource and the EV per resource ounce metric. Even if you disregard any of the upside from exploration success, resource growth and development that we're working towards. Now, we're in a really good location in terms of being able to develop this asset. We've got fantastic access to infrastructure, roads, sealed airstrip in Meteoric. That's how our crews get in and out. We've got good infrastructure on site. And in terms of how we're advancing this project, the pre-feasibility study we're completing at the moment, that will be released next month. And that contemplates a production plan that has multiple mines feeding into a central mill to de-risk that production. So it's a really exciting project. We're really enthused by it. Now, just briefly touching on our peer group in that region, in the Murchison region and proximal to our project. If you look at the grade there, our resource grade There's only one other company with significant scale in terms of resource that has grade comparable to us, and that's Walluna at 3.7 grams. Our global resource grade is 3. In terms of our project, we own it 100%. We've got a significant land holding, 280 square kilometres. 100% of that resource is on granted mining leases. So in terms of expediting through to development and production, that's a really good tick in the box and expedites that process. And I mentioned that we're serviced by really good infrastructure there with the highway running right past our Andy Well mine and the sealed airstrip in Meekatharra. Now, in terms of the mine plan, key for us is de-risking that mine plan, and the pre-feasibility study contemplates multiple mines, so open pit and underground, various ore sources that provides flexibility around production. And you can see some of the resources that we'll be drawing on for that pre-feasibility study. The key focus for us now is completing that PFS, getting that out next month, and upgrading. From there, we look at upgrading the resource and growing the resource. And what that will deliver for us is both an expanded production profile and an increased mine life. So that's the key focus for the business as we move forward. In terms of the resources themselves or the mines, Andy Well, very high grade ore body. This was mined up until 2017 in an Australian dollar gold price environment of $1,600 per ounce. So about half of where we're at today. 330,000 ounces were produced at 8 grams per tonne. There's still 500,000 ounces, 500,000 ounces in the ground there at 8.6 grams. 3 of the 5 lodes that host that resource have never been mined. So they're completely virgin, have no mining history. All of the lodes remain open at depth. And we see a really strong opportunity to grow that resource as we re-access the underground and use the underground development as platforms for drilling at depth to expand that resource. So we see a great opportunity to grow that resource at depth. On site, from that previous mining operations, we've got significant valuable infrastructure. We've got workshops, we've got stores, buildings, powerhouses, as well as 6 kilometres of underground capital development, which we'll be using as takeoff points to go and access that resource and monetize that resource at Andy Well. 15 kilometres to the southeast of Andy Well is our Turnberry deposit. This is a virgin deposit. It's under about 15 metres of transported cover, which is why the old timers didn't discover it. There's no shafts on it. It's never been mined. 685,000 ounces at 2 grams per tonne. Again, on a granted mining lease. And this we see as a really important part of our production plan with our PFS. Initially an open pit, a large oxide open pit, followed by a higher grade underground mine. The resource is very well understood. So over 80,000 metres of drilling has gone into it. So we've got a very good understanding of the geology. And if you look at that resource in long section, the resource has about 1,600 ounces per vertical metre down to a depth of about 200 metres. So it's very well endowed, and it drops off from there. And that's a function of lack of drilling. So as you get down below 200 metres, the drill density drops off, and that's the reason the OVMs drop off. So this is a fantastic ore body that will be a key part of our production plan with the PFS. St. Anne's, this was a discovery that we made mid last year, and we've spent the last 6 months drilling this out into a resource. It's a very high-grade, shallow oxide open pit that'll be complementary to our Turnberry open pits as part of that PFS study. And the other thing that you'll notice is that both St. Anne's and Turnberry sit within that fairway shear zone that runs north-south through the greenstones there. That Turnberry St. Anne's corridor outside of that immediate resource area has less than 3,000 metres. So it's highly prospective location to go and grow that resource, and we see that as a good opportunity to go and target. And in that vein, outside of those immediate Turnberry and St. Anne's areas, we see the Nowida Greenstone Belt, which is an Archean greenstone belt. There's a fairway shear zone that rips north-south through that corridor as a really strong exploration target. And we're busy drilling in that corridor as we speak. So we started drilling there a couple of months ago. We expect first assays from that drilling this month. Now, that corridor already hosts over 700,000 ounces. And outside of those resources at Turnberry and St. Anne's, all that corridor has experienced is broad space reconnaissance drilling, vertical RAB and air core drilling that was completed in the 90s and early 2000s. And that's great for understanding the underlying geology, but it's not fantastic for discovery. So we need to go and follow that up with closer space drilling, which is what we're doing now. This is how we discovered St. Anne's last year, and through geochemical anomalism and low-level gold in the previous drilling. And that's what we're targeting with the drilling that we're doing at the moment. Now, outside of the Murchison, we've got a really exciting and complementary gold project at our Circle Valley project. This is a much younger geology. This is Proterozoic system. We've got fantastic intersections, broad, shallow, high-grade gold at Anomaly A. And we went back earlier this year and extended and expanded that footprint at Anomaly A and drilled at Fence Line and hit primary gold for the first time at Fence Line, which is about 10 kilometres to the northeast. So this is a much younger, different style of mineralization to what we see in the Murchison, but no less exciting and no less complementary. And then finally, from a rare earths perspective, and happy to talk more about this at our booth if you want to come and see us, we put some really exciting results out this morning, the highest grade we've received to date. We own a province scale opportunity, 2,500 square kilometres. We own it outright. We've got fantastic access to infrastructure, and it's a really appealing opportunity for us to pursue. So thanks very much, and happy to talk more at our booth. Thanks, Chrissy. Yes.
Good on you, Tim. Tim and Mika. Now, I'm actually not sure what the next presentation is going to hold for us as he walks his way up on the stage here. We're talking Forrestania. This is the newly anointed one. You've only been with them for about 8 weeks. He's got a very solid vision. So he wants to add value to this company via his 3-pronged strategy. He's got exploration, collaboration, and acquisition. And I did a little bit of searching today, and I didn't have a chance to go and speak to Michael Anderson earlier. So I'm thinking, what are you going to focus on? Are you focusing on the fact that you're really well known in Western Australia, or are you going to another jurisdiction that you might? Let's welcome everyone. Thank you.
Thank you. And yep, thank you. Yeah, so Forrestania is a young company, and my tenure there even younger. I joined just 2 months ago. But clearly the company has a great portfolio. And as of yesterday, we've just added to that with a deal in Canada that I'll speak about. The strategy that we are focusing on is very much about making things happen. We've got some great ground in Western Australia, the historical Forrestania belt, next door to Mount Holland's Kidman discovery, the Earl Grey pegmatite, 180 million tonnes at 1.5%. So we're absolutely in the right area for lithium. We're next door to what was Western Area's nickel ground, but that's now being proactively explored by IGO, also for lithium, and a wealth of gold history in that region too. So we're proactively exploring at Forrestania, some very encouraging results at the likes of the giant pegmatite, following up known intersections, 30 meters at 3%, etc. But the expansion into Canada, like many of the junior companies in this space, announced yesterday into the prolific James Bay region. And really, this is about giving the company as much opportunity as possible. We are an explorer, and in that game, you want to have as many irons in the fire as you can, increase your probability. And we're in two, what I think arguably anybody would agree are world-class lithium exploration jurisdictions. We are very proactively seeking further opportunities to both collaborate in Australia and in Canada, and ultimately to acquire complementary ground to the positions that we hold. And my coming on board, I haven't come here to warm a seat or just simply draw a salary. Very keen to make things happen and determined not to stand still as we look to add value for our shareholders and stakeholders. Forrestania is the name of the company. It is also our flagship project, that 100 kilometers long of strike through some very well-known geology. And our near neighbours are world-scale projects, Covalent at Kidman, sorry, at Earl Grey, as I say, IGO, and even the historic Bounty gold mine, where these things definitely give us tremendous optimism about what we can expect to find on our own ground. Now, we have got an ongoing drilling program in a bit of a pause at the moment whilst we process the results of the most recent drilling and target for the future. Got some very talented people on board. Melissa McClelland, our lithium exploration manager, worked at Kidman, knows how to interpret the soil geochemistry of the region and come up with additional targets. Ashley Bennett, who's here with us today, has got a wealth of experience in gold and other metals in this region. So got good team around us working on great land.